Hey, great. Hello, everyone. Today we have a very interesting discussion. Uh, Open finance versus centralized finance. Thanks for joining our stream.
Great.
Hello, everyone. Yeah, I'm
Hey.
hearing myself for some reason. Okay, yeah, now it's good. So today we'll talk about, as I already said, very interesting topic about centralized versus decentralized. We will try to answer all of your questions, all questions from the Waves community about advantages, disadvantages of each of these types of finance, let's call it so. And we will try to I think we will try to make this conversation as interesting as possible, not just to say like decentralization will win at some point in the future. So this discussion should be very interesting. So thanks for joining. Today we have 4 people on our call. First person I see on my screen now is Aleksei Pupyshev. Aleksei, can you say a couple of words about yourself, please?
Hello, guys. I'm a digital nomad and believer in decentralization. Also a co-founder of Neutrino protocol. And right now my team is working on cross-chain protocol called Gravity. So we are working on products around that. And we are strongly believe into like cross-chain decentralization, because right now we have some issues with the bottleneck of one most popular chain, and this is a future for another chains, but also community. We are merging communities from different chains to do something together to empower each other. So this is my goal, and this is what I'm here to discuss.
Thank you, Aleksei. We also have here Jay. Jay, can you tell us a little bit more about yourself, please?
Yeah, sure. So my name is Jay Kurahashi-Sofue, the VP of Marketing of Avalabs. Avalabs is a tech company based in New York, actually, but we're fairly global at this point. We're primarily building Avalanche, the decentralized smart contracts platform, currently running the EVM and multiple other feature sets as well. So really excited to talk about this controversial topic.
Thank you, Jay. Thanks for joining us today. And we also have Sten here.
Hey, yeah. So everyone, hi, my name is Sten Laureyssens. I'm the strategic advisor to the Waves Association. The Waves Association mainly tries to look at what direction the entire Waves ecosystem is trying to go to. We have some lovely meetings like we had yesterday on voting on grants, looking what projects the ecosystem wants to fund, etc., such as Gravity, for example. And I'm also pretty excited to see where we're going with all of DeFi, what role does CeFi play in that, and also just the general market trends. I think it's a pretty interesting time right now to see, like, are we going to go up again? Are we going to go into a bear market? How does that impact DeFi, if it does at all? So yeah. And Inal, do you want to present yourself as well?
Yeah, so my name is Enal. I'm a developer advocate at Waves, and I'm also a Waves Association board member. So I'm mostly a tech guy, but at the same time, I'm kind of fan of all the decentralized things. But today, I'm not sure that I will stand for decentralization, but it's just like small spoiler of our discussion. Okay, guys, before we start, I just want to remind our listeners that you can ask your questions using YouTube chat. So feel free to ask any questions or just to drop, I don't know, love messages. I see there, Avalanche love ya. There's a message in our YouTube chat. So just feel free to drop any message to share your opinion about our topic and to ask any questions you have. So the very first question. Our topic is called open versus centralized. How do you think, guys, is it really possible to compare centralized and decentralized finance? Do you really think that it is possible to compare these two things? Like, just feel free to unmute yourself and say if you want to say something.
Maybe my first question to all of us then would be, do we identify centralized finance as the crypto version of centralized finance, such as like crypto exchanges, etc., or are we really like looking towards like traditional finance? because I think we'd get different questions depending on how we would identify centralized finance.
So in my personal opinion, it is impossible to compare decentralized finance with a whole range of financial instruments in the centralized field. Let's call it so. I mean, if we want to compare centralized and decentralized, we only can compare it in terms of like crypto-related things, because there are so many tools, so many centralized tools, which just do not exist in the decentralized world. So
let's make a distinction with traditional finance then, like
let's speak about three categories like TradFi, CeFi, and DeFi. And CeFi will be like centralized exchanges, lending protocols, and such.
That works cool.
Yeah, I think it makes sense.
Yeah, that makes sense. What you said, maybe just to tag along on that, I do think that decentralized finance is creating something that is just impossible to compare. I think the main question usually, or for the last few years, has always been, can decentralized finance compete with centralized or traditional finance? Like, can we create something that provides the same level of functionality as the other counterparts? But I think what we're facing now is that we've like, as a whole industry, we've created just something that is so much more powerful. And it's not just a matter of does it work, but it's also a matter of like, we've created things and tools that just allow us to do something that traditional finance and centralized finance just cannot copy or even get close. And I think that's probably going to be a very big factor in, can DeFi win, or will it be centralized finance, or will traditional finance like maintain its grasp in the next like 10, 20 years? Because I think if you create something that isn't possible in the counterpart, you just have a very big winning factor. It's a big unique selling point, because you're offering something that allows people to make money in a way that no one else can.
So if I'm getting you right, you say that there are tools which exist only in the DeFi world, and you cannot have same things in centralized finance. What kind of, can you share like examples? The only thing I can think of is flash loans, I guess. Where else?
Flash loans, sure, but I also think that the whole structure of combining both, let's say, on-chain certainty in the transparency of what you have, but also the certainty that what you're seeing or what you're looking at is not hidden somewhere in a database and you don't really have an idea of how it's working. You have that open factor, but then you go into the Lego block part of finance, where you can combine the lending and the flash loans is one thing, but the whole structure of like lending and the incentives around lending protocols, the different versions of AMMs, whether it's like stablecoin focused or variable asset focused, but you have all the incentives of those protocols and you're just adding them on top of each other. And if you combine things, and we're seeing more, but stuff like USDN, where you have this integrated yield that is sitting from, not coming from lending or borrowing, or not coming from like a protocol incentive. You're just creating different layers of financial incentives for people to interact with different protocols, but they're all sort of like falling together as a puzzle, like adding on top of each other. And I don't see anything like that. Like in centralized finance, you can't really recreate that with the same openness, with the same transparency. And I think especially with a lot of people getting, this is maybe more in the traditional, like the real entire world, like media, it's so difficult to really find information that, you know, this information is real, whether it's about like a president or about a vaccine or about a disease, or people are hungry for transparency and good information. So if you can combine that with something that is really difficult to recreate in a traditional or centralized counterpart, I think that is something that it's just something unique. You can't copy it.
Well, actually, on the one hand, I do agree with you. On the other hand, like let's take even traditional finance systems, finance tools like neobanks or something like that. All of them work on creating APIs, on making their product as open as possible, so you can build your own, I don't know, bank or kind of bank system just using their API. And this is like the same with, I guess, Binance, Coinbase, all the centralized, for example, exchanges will go the same way. At some point, they will have more protocols, more like tools, how you can build your products on top of them, how you can get advantages of this centralized finance. So right now, yes, open finance, you just can. There is a like you can take your own building block and put it like another product, and you'll have, I don't know, a very pretty good product. And I'm not sure that centralized finance will not go the same way in the future. I don't see any reasons for them to not do that. That's like my opinion.
Can they do it with the same amount of transparency? Because I agree they will go that direction, but can they offer that?
That's a good question. Do we really need that kind of transparency? Do users really need that transparency? We as like, I don't know, developers, protocol creators, we may need that.
I do.
You are not representative.
I need to know there is my funds, you know, because otherwise there can be an event like, and it's gone.
Okay. Let's talk about average user. Do they really need? Why I'm talking about this, because there are such cool things like, I don't know, Uniswap, AMMs, Swapify, decentralized exchanges. But if we just compare centralized exchanges volume with any sorry,
you have funds. You're gonna send the funds to your whatever like girlfriend, right? So you're sending it, and you have to check the status, right? You have to see the status transaction. Is it like in processing? Is it already on, I don't know, on the system, appear or not? Like you have to see it, right, as a user, because without that you don't know what's going on. Just send it and wait like 5 working days. We will let you know. Send email to your home address. It's not working. Like it's just not working. And this
but that's a very practical part. Even yeah, sure.
Jay, I wanted just to ask you as a VP of marketing, how do you think, do users really need this transparency, decentralization, in your opinion?
Maybe one of the angles I was going to take to add on to Sten's point is maybe not so much transparency, but reliability. And I think Aleksei also kind of touched on it too a little bit. Like think about something as simple in the decentralized world, like as an atomic swap, right? The atomic swap totally removes counterparty risk. And I mean, assuming that the chain can scale. So if you're not picking like some of the slower chains, but assuming it can scale, that's super powerful to be able to trade an asset for something else and also leverage smart contracts to make sure that the balance checks are true and you get the funds that you need and the counterparty also gets the funds that they need. I think to take a centralized example or a traditional, example more so is like the 3 to 5 business days clearing is all obscured by the central banks. They all basically have front ends that are saying, oh, you get your funds instantaneously, but in the back end, there's like a T+2 settlement layer. There's also clearing houses. There's so much going on. And I think for maybe the day-to-day user who's probably not OTC trading 6, 7, 8 figures, I think maybe not. But I think that's when you're assuming things are going smooth and all well. But if things don't go well, then you need a more reliable system than something that is kind of propped up with some tricks and a little bit of magic, right, on the front end. I think that's how I would describe traditional finance. And with decentralized finance, the verifiable aspect, the truth, I think that creates reliability because you're going to be guaranteed that you're going to get those funds so long as certain parameters are met or whatever.
But if we compare with traditional finance, I do fully agree with you. But if we compare with, I don't know, with Binance, I don't know, you just make a transaction, you wait 3 seconds, you do not pay like, I don't know, $50 fees, you just get instantly.
You're still lacking the reliability and maybe I guess like, the reliability I think is still not there, because think about think about like when Binance randomly limits withdrawal.
Withdrawal suspended.
Yeah, exactly. We all know.
Suspended. Why? No reason. Why
no reason, but you're just gonna have to wait, and then the market tanks one day, and then you get totally burned. The reliability is absolutely gone there. Even though the transaction will get settled in just like that, you're still not getting end-to-end reliability.
Okay, that's like reliability is kind of risk which we want to avoid if we use decentralized finance, right? Decentralized tools. Okay, cool. Then what kind of risks we face if we use decentralized finance? There are even more risks, and sometimes it's even not clear what is better to face, like to have some issues with the reliability or to face, I don't know, smart contracts back, for example. And at some point you can have like nothing, and there are so many scammers in the wild right now. So do you really guys think that this risk, like of, let's call it risk of being non-reliable, do you really think that this risk is like, let's call it big enough to use decentralized finance? Because there are also many risks.
Opportunities.
Good word.
Opportunities.
Explain, please.
Imagine Uniswap without custom pools. So many scams created tokens there and listed there, right? Not only scams, but legit projects as well. And it was like, right now it's probably the first exchange the token listed. And if you're gonna be first and you're gonna like take this opportunity, of course you will take this risk. And this is permissionless, so you can join, you can invest, you can buy, you can sell, whatever. It's like it's a wild world, and this is why it's important. So I'm not sure about people are trying to reduce a risk of whatever, like reliability, but probably we have a combination of both. We have reliability because everything is working in the centralized matter, so there is no risk of, I don't know, closing contractors or suspending maintenance, so there is almost zero risk on that. You are keeping your private keys, it's also good, but you have opportunity, of course, and the combination of both, this is something, you know, most important here. This is why we have DeFi in the first place.
Okay, Jay, Stan, do you have anything to add?
Yeah, I would just take an example of the other end of the spectrum to answer this side of the spectrum. I think if you look at what happened with, I mean, I think everyone by now is up to date with all the the entire Wall Street bet trends and everything that's going on with GameStop and all the other meme stocks. But I think one example specifically here is, it's very obscure because Jay, I think you said, like, if you're not trading a six-figure sum and you're like somewhat, let's say, a retail trader, it's especially those people who have realized now that trading on Robinhood, for example, in their case, I mean, it was okay. This is what you would call, let's say, not necessarily an orchestrated pump, but it was an orchestrated group buy effort with people educating each other essentially on, hey, there's this opportunity of this massive short squeeze, and rather than whales making that happen, we can make that happen as a group. And the numbers, I mean, the numbers were not all of them were right, but the numbers were pretty spot on. And what they faced is essentially some, let's say Robinhood, who is owned by a specific group of people who have a vested interest in that short squeeze not happening, because they also happen to own one of those funds that was short. And in that case, I think it's a first example of people really getting an idea of how the synergies between different companies that are owned by the same people on a very high end level, how it influences someone all the way down the chain. Even if you only have, like, let's say 10 shares of GameStop, it's nothing. But people came very close to that realization of, hey, this does exist. Like, it's possible for someone to pull that trigger of, you can't buy those stocks anymore or you can't sell because it's too volatile. Of course, people will use any excuse for that, but whether or not this is true and whether or not it actually impacted or didn't impact, people realize that this opportunity or this possibility exists for someone who owns a centralized, whether it's traditional or a crypto finance company, for interests that are not aligned with the people who are on that, let's say, bottom retail buying end, to face the consequences. And I think, of course, everyone sort of has a very big trust in CZ and his mindset, and we kind of have to trust the fact, like, hey, funds are safe, and we have the best interest of the crypto industry. But it's only, I think, a matter of time until the interests between a very big company that sort of like was in the early stages of growing together with the industry starts having different interests than its users when it's centralized. I think Facebook started out that way as well. It was a very big alignment, and at some point the interests change, and it's just something I wouldn't want to have with, like, let's say, a larger amount of money, even a smaller amount of money.
Okay, that's a great example with GameStop. As far as I remember, Robinhood, the app, they just stopped trading GameStop shares. But how many users actually say, okay, we'll move to decentralized finance? I'm not sure that, like, many users, they said, okay, fine, they did something wrong, like we did, or we did something wrong because we tried to pump this share, and they just said, okay, next time we'll, I don't know, we won't do the same. Or they didn't move to decentralized tennis, as far as I understand.
Dodge.
I don't know.
No, they moved to Dodge.
No, they did. I'm not sure that they moved, actually, because
they moved to
GameStop
different equities platforms that didn't restrict things, but that's like the middle ground, right?
Didn't restrict yet.
Yeah, exactly. So I think it takes a few times to really understand the gravity of the situation. You're gonna get burned once, and you're not gonna totally go to the decentralized world and be like, crypto is life, right? But you're gonna go to I know Webull, I think that's US based, that's an equities platform. A lot of people moved there because Webull wasn't restricting. I think some of the old brokerages also weren't restricting either, so they moved. I think to your initial question, Enal, in terms of like the risks involved, and I think Aleksei said opportunity. I think another more like future-facing thought is UX just needs to continue to improve, because there are like tremendous risks with DEXs or decentralized solutions. One perfect example that I see all the time is blockchain transactions aren't reversible once they're accepted on chain. I think people are like, oh my God, my funds are gone. Can you like reverse it? I was like, that's the point of this technology. So maybe there needs to be some sort of front end. There needs to be education, I think. I think the front end would be nice. Maybe it's like a two-step verification. Like, are you sure you want to actually send this for good? Because this is like, or maybe 3 steps. Maybe that's kind of a paradigm we have to adopt. On the central,
sure? There is a lot of steps in MetaMask already. Like,
yeah, that's true. People are trigger happy though. They're going to be clicking the gas fees, and they're going to try and send their transactions and speed it up. I don't know. I guess it gets messy, but I think a quick anecdote on the centralized side. I've been personally affected with 3 prominent centralized exchange hacks. Mt. Gox was one. There was also BitGrail, if you remember BitGrail from 2017. That was an Italian developer. I don't know where he's at these days. And there's another smaller one that I was involved in. So clearly have learned my lesson, but it took me 3 times to not have funds on a decent amount of funds sitting on a centralized exchange. And I think there's weak points on both sides. So I don't think it's a question of one or the other. I think there's risk tolerances. I think there's also risk tolerances in traditional finance. Like if you're a high net worth individual, you're probably going to be a little bit more, you have a higher appetite for risk, and you might play in institutional products, and you might be doing things that are accredited, at least in the US, accredited investors can only play in, as opposed to if you're like a small cap investor, you're probably only keen on even trading ETFs and really safe government issued bonds and things like that. So I think it's more of a spectrum. I know that's kind of a boring answer, but again, it kind of comes full circle to Aleksei's point of opportunity. How big of an opportunist are you? How much risk are you willing to take on? Are you willing to ape into a liquidity pool for a year over time, or are you only willing to buy an ETF and sit on that for decades, something like that?
Yeah, that's a very good point, because next question I'd like to ask is like, how do you guys think, will the DeFi still be like very niche product in 2 or 3 years, or will we get, I don't know, more users, hundreds of millions of users? So as we already said, there are many risks. There are even legal risks in some countries, and there are risks related with, for example, with centralized exchanges. At least you can take your case to the court, and you can say, okay, I don't know, something bad happened. Here's my evidence, and they will judge you. With decentralized finance, there is no even person who can appeal to. So, so how do you guys think? Will we get like a bigger traction of DeFi, or will it still be very niche product in 2 or 3 years?
I think there's this book by, I forgot his name, Jared Diamond. It's a book about like how throughout the history, let's say European civilization sort of expanded over the globe over the past, let's say, 1,000 years, but also before that. And he looked at how some countries or civilizations managed to like overcome other countries. And he tried to like extract the key factors of like why one technology wins from another, and what makes something grow much quicker than something else, which was maybe even better. And it always struck me, there's this, because I looked at this from a technology perspective, and there's 3 things that are like key in that. And I think one was the easiness of seeing that one technology has an advantage. So like, how easy is it for people to see that this new technology is better than something else, which is kind of circling back to what you said, like, hey, this thing happened with GameStop, but I didn't see anyone like jumping into decentralized finance. No one necessarily jumped into that because maybe it's not that easy to observe that this technology is better, because I think crypto requires quite some, let's say, base knowledge to understand why it's better. So there's certainly a threshold there. Another thing is, and that's, I think, what we obviously all know and realize that is true, is like having an economical advantage with whatever's already existing. So does it improve, does it, as Aleksei also said, like, does it give the opportunity for people to like make more money or make an equal amount of money, but in a more efficient way? Like does it improve something? In this case, definitely financially. And then the other thing is that if there's a sort of like a increased social interaction, like if by using that technology, there's a certain level of prestige. And I think prestige, like if you say like, hey, I have a bunch of Bitcoin, some people definitely like look at you in a positive way. But if you see what's happening on like Reddit, for example, there's a very big social interaction that made this whole GameStop scenario grow so tremendously. But Reddit on its own is a great example of that. Facebook on its own is also a great example. It's like this increased social interaction that makes something grow. And I think for DeFi to like really make it work in the next 2, 3, 4 years, we definitely need all those, let's say, gaps filled in. Like there needs to be an increased interaction between people to like learn together, do that together. And I think crypto Twitter is still too toxic for people to like really get over that threshold of, I'm learning about this and I'm getting the minimum required information for me to understand why this technology is better. And I think the institutions are like finally getting to that point of realizing, hey, it's not necessarily a threat to what we're doing, but it does make things financially more interesting. So you do said that they're sort of like stepping into that risk, but they have so much history in hedge funds and like research. They have a good idea of like why this could be. But I think that's what we're probably missing in the next 2, 3 years. And it's kind of like the chicken and egg problem, because I think it's maybe a different topic, but we're sort of like getting close to burning through the energy of this bull run that we've been on for a few months. And once we sort of like go back into that bear market, a lot of people are going to say, see, I told you so, it's going to blow up. And then people sort of lose interest. And that would be the right time for people to like get to know what it is and what it's about and how you can participate. But that's usually where people sort of like lose that interest because there's a lack of money opportunity. So I'm not sure if we will have like hundreds of millions in 3-4 years. The stars don't necessarily align in that case. Jay, what do you think? Because I think you mentioned earlier that most of Ava Labs is like, let's say, incorporated in New York and probably a good part of the team. Maybe you've definitely sensed more of the whole GameStop scenario than most of us like in Europe or Russia or other parts have. Like how does that feel for you? Do you think that it's been sufficient enough of a like, hey, this is really not right, and it's not just the active Redditors, but also the grandmothers and the taxi drivers who know about this? Or like how would you position that?
Yeah, I think one of the complicated parts about the US is there's a lot of regulation against crypto, and there are a lot of looming threats. And so a lot of the projects that are based here have to tread a little bit cautiously. And so, Enal, you brought up the point about like how many of those GameStop traders went to DeFi, how many of them use Uniswap? Well, I think one of the complicated points that block that flow really nicely is acquiring the actual tokens themselves. So if you, maybe not like the mainstream ones, but if you have some altcoin that's longer tail, you probably have to use a VPN and access it that way, or use a decentralized exchange. Two ways which are super technically involved. I don't think any of our grandparents are going to be able to do either path. So if you're picking the true decentralized open solutions, I think it'll remain a fairly niche, I guess, like a sector for some time. But I think a lot of people are paying attention and how to make sure that can be as accessible as possible. I think on the flip side, there's some projects that are trying to tackle the more retail focused approach, like BlockFi, I think is one. Another one that comes to mind is Dharma. I don't know how they're doing actually these days, but I remember when Dharma pivoted and they were saying, hey, we don't need to be putting front and center like we're dealing with stablecoins. We just need to show you the dollar amount, and all of the back-end settlement occurs with on-chain technology, I guess. And I think that's the approach that will also bring in more retail. And again, this is the spectrum conversation. I think there's going to be products that are easy to use, but I think the options are a little bit limited. Perhaps with BlockFi, they're probably going to be vetting certain lending pools that could be on the platform. For Dharma, there's going to be certain financial products that are available too. So people who are less keen on taking on huge amounts of risk can take on or use those products and not have to adjust their behaviors so much. But on the flip side, if you're, again, Aleksei made this point earlier, if you're going to try and get more yield and you're a little bit hungrier for the riskier type of products, then you're probably going to take the week or however long it takes to really understand the technology and then jump into that bandwagon as well. So I think over time, we've seen so much growth in the space. I think we've all been through a few bull and bear markets, I'm sure. And even the most recent one, I'm sure, like, I think, Stab, the way you described it, it's like, that's when you should be paying attention to the technology and really understanding what's going on so you can sift through all the noise. I think these moments are super critical, and it's going to shake off all the scam projects. It's going to shake off all the ones that aren't viable, that don't have product market fit, and the true ones will continue to survive. And I think, I don't know how many more runs both ways we're going to have, but I'm sure we're going to have plenty more. And that's when we're going to really see, maybe it's not DeFi that's going to carry the system forward. Maybe it's a totally different sector. So I think with kind of closing thoughts on the GameStop frenzy, I think the retail mania in the US has been insane. It's funny when people are talking about GameStop, they're also talking about AMC, all these mostly American companies, I think, and American equities. It almost reminded me of crypto. And I was like, oh man, I think equity is also like bubbling up real badly. I don't know, maybe that's kind of like my take. So it's actually interesting because the I guess like casino like environment that we've all kind of experienced in DeFi and decentralized systems have now permeated through equities. And I think you also kind of saw that a little bit in the housing market back in the late 2000s as well, at least in the US and some other countries. Iceland, I think, is another one too. So I think, I don't know, people are just hungry for value. They're not really I think physical assets are not so accessible unless you're super wealthy. And so they're trying to find easier ways to access easier way to preserve their wealth. And it seems like digital is a no-brainer.
Yeah, that's a pretty good point about all this money in DeFi. Just one thought I do have right now is that in 2017, for example, we have seen many examples of projects which raised like, I don't know, hundreds of millions of dollars with just an idea or white paper with nothing else in 2017. Now in 2021, we see something similar in classical venture capital. There are startups rising hundreds of millions of dollars with just an idea or, I don't know, very, very simple concept or something like that. So these two worlds, they're kind of merging somehow, this centralized traditional finance and decentralized finance. So how do you guys think, will we see in the future, I don't know, like Visa will offer some decentralized things, the apps on the, I don't know, on Avalanche or Waves or Ethereum or something else? Do you really believe in it, or do you think that it's not just possible, I don't know, in the next 5 years?
It would be great if I can answer, because I thought about this analogy many times, and look at internet. So before internet, it was like telecom companies, right? Or IBM, like it was the computer companies, but then internet starting disrupting the whole industry, everything actually, the whole every industry, every like aspect of our living, etc. The winner and winners, they are not companies from before internet. It's a new startups who became like more and more powerful, right? Like Google, Facebook, etc. And I see exactly the same analogy, just because of flexibility. I think crypto startups, they will become like next Google of decentralized finance, etc. Not existing banks.
Probably right. Existing banks. Coinbase is 40 million valuation.
It's a startup, right? It was a startup.
But not Uniswap.
Yeah, let's see. So it seems like the traditional companies, they're not flexible enough to work in this market, to adapt on this market, to suggest some products, organize marketing, whatever. Like they're not so flexible. And the Visa itself is like it's existing for a long time, but it's not so innovative, right? Of course, they do have some kind of patents around blockchain and finance, but the crypto is much more faster, and the startups or even single developers, they feel it. They can create the games. People start these games, and then we'll see some of them are really big, like Uniswap, which is like unicorn at the moment. So, and yeah, it seems like the new players. Most of them we don't know yet. Some of them we are creating right now. So let's see. Not Visa, of course.
Okay. I do have a question, like not my question actually. I got a question in my Telegram. It sounds like, how do you guys think? Can you tell us 5 advantages of DeFi over CeFi? Or 3 at least. We have talked about like 1.
Yeah, maybe 1 would be more efficient transactions. So theoretically, you're paying less fee to the middleman. I think that's an obvious one. I think the reliability piece is, I think, another one that I'll definitely hit home. Just, I guess, so long as you know how to use it and you're not losing your funds. So I think that's 2. I think and then maybe more of the novel approach, I think that was mentioned with like flash loans. There's new products, financial products that are being made. And so the ceiling of innovation has been lifted higher. I think traditional finance and even centralized exchanges and things like that, the ceiling is set to a certain level. And I think we're very close to that ceiling unless tech keeps, or hardware and tech keeps innovating. So that, I guess those are 3. And I'm sure the others have things to add there too.
Yeah, I would add to your last. Sorry, Aleksei, but I would add to the last one. It's not just the ceiling that's being lifted, but it's also the accessibility bar being dropped, because I think, Enal, you mentioned also, like, yes, some of the traditional finance, they're also generating all these tools for like finding APY on multiple parts of that whole T plus something chain to like maximize that efficiency, but it's just not accessible for your average retail trader who's like trading stocks and also has an Uber like day job, for example. That's what I think is most important, because we're making it more interesting by making it more unique and more innovative, but we're also broadening the scope or the width of people who could trade it. And also, like, people are educating themselves. Like I think never have so many people learn about options with this whole debacle than ever before, which is a pretty complex thing to understand. I think most people in crypto don't even properly understand options, like what it's for. So we're making it more interesting, but we're really growing the audience that can access it, just because anyone could realistically access DeFi, and that doesn't count for the traditional counterparts. Aleksei, sorry to interrupt you. You were going to add something.
Yeah, just want to add something with transparency, because decentralized finance has transparency, so you can check everything, the status, what's happening, where is your funds, and everything. And this is an interesting thing to have.
Okay, so I do have the last question, guys. How do you think, like, will we still see, I don't know, 100 plus APY in the, I don't know, next year, or will the DeFi and all these yield farming things be a little bit less risky, but at the same time less profitable? No, less profitable. Will the DeFi go that way, or will we still see like very high APYs but risks too?
The high API, they have only one and very important destination is actually bootstrapping liquidity or bootstrapping capital, right? And if you have a purpose,
I thought you were going to say that the trash can. They only have one destination, the trash can.
No. I mean, nice joke. I mean, high APIs for new projects is pretty okay, because, you know, this is only working way how to attract the many people, traders, and some interest. Yeah, it looks like a Ponzi, but like, you know, sophisticated Ponzi and technologically improving Ponzi. But this kind of thing is really important for new projects. For existing established projects with huge volumes and the TVL, etc., I'm not sure it's actually quite important. So the APU can actually go down a bit, and it's self-regulated. So for the new projects, high APU is okay. For the established projects, it's like no so big reason to do it.
Yeah, I think the interest rate, or the APY, sorry, would remain higher than traditional finance for sure. I just don't see how it would get lower than that. So I think net positive, even by slightly more. In the US, I think a perfect example is all of the banks are obviously changing their rates based off of the Fed interest rate. And right now, if you want to open a high yield savings account, it's 0.5% on your cash savings. So really pretty much just losing money still to inflation,
yeah.
But reducing the loss just by a little bit. And I don't know, I mean, even I can open my own lending shop right here, and I'm hoping that I could give people more than 0.5% back on their return somehow by doing some fancy maneuvering. But I think DeFi, maybe not the 100%, 200%. I think those are probably because of illiquid markets and people are just, you know, the opportunists going in and people who don't want to take on that risk not coming into those systems. So I think there are going to be some like middle point, but it'll definitely be interesting to see, especially as maybe more financial products kind of like flash loans and other things like that could also potentially up the yield a little bit. I think yield farming, I think, is one interesting direction. I don't know how I feel about that long term, but it makes sense from, I guess, like a bootstrapping incentives perspective, at least this early in the game.
Yeah, I would add to that. I think it would be great for our space to sort of go through a forced contraction, almost like an implosion, because I think a lot of the high yield is currently being generated just by the fact that the tokens that are being used to pay out the incentives in that protocol are just, they're continuously going up, and specifically because of how geniusly, let's say, because I think it is pretty genius how those built-in buy mechanisms are incorporated in that, let's say, whole protocol's tokenomic system. But the main thing that I think is driving the high APYs is purely because a token that is being paid out is just continuously growing in value. And I think it would be great for the entire, let's say, ecosystem to go through this forced implosion so that the yields are not as attractive anymore, purely because we've designed the perfect tokenomics for something to go up. And we're forced to be more creative into like finding where real usage and real value is being generated, and how that can translate into token value or sustainable yield throughout an entire year. And I've had a discussion with one of the developers of Curve about that a while ago, and it'll be interesting to see how let's say big behemoths like Curve, for example, who have like multiple billions of value sitting in their protocol, how they will respond to that when the inevitable thing happens where the entire ecosystem drops in value and the tokens follow suit, and then the yields won't be as interesting anymore. And I think it will be great because it'll not only will it take out the scams, because I think scams they'll die regardless, but the projects that are just sort of like surviving now because their token is thriving, but the token is thriving because everything is thriving, it's pure speculation. Once that stops, I think the real winners, the new Googles, will come from like finding the perfect niche solution in that bear market. Because if something works in the bear market and it can maintain both users and assets and profitability in a terrible period throughout, let's say, a year-long bear market, then when we go back into a bull market in like 2-3 years from now, that will be the winner, I think. That'll be where something is built like to last in any scenario, and not just in a bull market.
Yeah, thank you. I want to try a new type of questions. Let's call it Blitz, and I'll ask 3 questions. You just have to answer with one word: yes or no. Each of you guys. No, only yes or no.
Okay.
Okay. So
okay. Let's go.
Do you believe that decentralized finance will replace centralized finance at some point in the future, maybe in a century or something? Do you believe in it?
No.
Yes.
No.
Sten?
Yes. Inevitable.
Okay. The next question. Can DeFi exist without centralized finance? This like related with the previous question, but I mean, not in a century, but in the next like 5 years.
No.
Oh, yeah. No. If you didn't add the last part, then I would say yes. But if it's within 5 years,
too.
No.
Me too. That would be
okay.
Stand there.
Yeah.
Okay. So and the last question. Will we see 3 trillion valuation of Bitcoin in the next 5 years? This is not related to the CeFi versus DeFi. It's somehow related, because I truly believe that if the DeFi will grow, the price of all the assets, of course,
it's a
Bitcoin
3x
first
from here,
will grow
right?
too.
Yeah.
It's a 3x from here.
3.5, something like that. Yeah.
Yeah.
So by asking this, I'm actually asking, will DeFi grow 3 or 4 times in the next, like, let's say 3 years?
I would say yes on 5 years. 3 years is tough.
5 years, okay.
Yeah.
Yeah, me too.
5 years is a long time.
In 5 years.
For 3 years, I'm not sure. It's like it's in the middle of bear market, bro.
Yeah, it could be.
Yeah, I know. Last questions there were kind of joke at some point, but anyway, thank you guys. I think we are done. We answered all the questions from the Waves community, all the questions from our chats. So I really enjoyed this conversation. So
could I throw in a question as well? Sorry to interrupt. I want to hear both of your opinion on, like, now that we're talking about, like, hey, do we see this 3-5 year projection? Jay, what do you think in terms of how much longer do we have in this current cycle? And not necessarily to say what do you think is the value of like where will BTC top, but more like how do you project? I think you've seen quite a few bear and bull market examples as well. Do you think that we're like 2 or 3 months away? Do we have until the summer? Do we have until the end of the year? Do we have longer? And then what do you think the bear market will look like? Will it be this horrible bear market like we had it last year? Or do you think the consolidation will be a bit less painful? Like how do you project that?
I think one of the things that I look at and I don't even have a traditional finance background. So all of this I had to learn by reading a ton of books and watching like plenty of documentaries and videos, things like that. But I definitely evaluate it based on macros. I try and look at that first and foremost. And then if you think about crypto still at the end of the day is a luxury asset class. You're not necessarily trading it for your livelihood. So I mean, some people might be, but most of the average people are having it as like a small percentage point of their portfolio. And if you look at equities too, something that I said before is like the equities is getting a little bit frothy as well because of the VC landscape, also the retail landscape. I think everything is a little bit wonky these days. And so one of the things that I would always say to people, at least if you asked me this question in January, I would say, okay, well, if you look at the US financial system, which is fairly large, to say the least, you're going to have stimulus packages come and have trillions of dollars injected into the system. Unfortunately, the way these stimulus packages are set is they have pretty much one dimension. It's, do you make this much money? Yes or no. Obviously, that's not a foolproof way. So there's plenty of young people, plenty of people that don't have families who don't actually need these checks, who just essentially got a bonus payday. And really, if you think about it this way too, people who are in that income bracket probably aren't exposed to really advanced and sophisticated financial markets. So they're probably not going to necessarily diversify, or they're probably going to just be putting in like GME, AMC, and perhaps crypto as well. And so now you have 2T in the system. So I think that's kind of what I was holding up for a little bit. And I think we're going to see it kind of trickle down a little bit. But I think with equities being a little bit wonky too, equities is no longer necessarily the best fallback solution. When you saw the bear market, the most recent bear market of crypto, I would assume that a lot of the assets from crypto poured back into equities are more traditional assets because it was seen as a safer haven. Now I think the only, I mean, not the only, but one of the handful of safer haven assets are probably like government issued bonds and things like that. So where I think people are paying attention to those and making sure that the interest rates aren't totally out of whack. If they do kind of change drastically, I think that could shake things up. If equities also blows up, that also I think could blow up crypto a little bit. Unfortunately, crypto is dependent on so many different things. It's hard to say where it's going. I think to answer the last point of your question, Sten, about like how low could we go, I'm hoping that we're not going to go as low percentage-wise as we did back in 2017, because I think we're no longer just in this fundraising white paper mania stage. We have a lot of different things going on. We have NFTs.
Airdrops.
We have airdrops. I think airdrops have I guess been pervasive throughout even the bear market. I've seen airdrops in the bear market, but I think we're a little bit more diversified in crypto, so I'm hoping that it won't be as drastic. But yeah, I think one of the craziest things I've been hearing too is people that come into crypto and they're like, this seems like a no-brainer. I can make so much money and I'm going to retire early. I'm like, don't treat it like that. You haven't been in a bear market or even a couple like we all have. So you kind of have to be very, very careful. And of course, if you're keen on that risk, go for it. If you're not, then definitely don't go for it.
Yeah. Yeah, let's hope we don't see another 85% drawdown.
Yeah, exactly.
And also one thing actually here, which is different from the last bear market. During the last bear market, it wasn't the stable coins, they weren't so popular as they are right now. And the only way and most popular way to go out of crypto was to buy dollar or euro or whatever, right? To go out completely from the industry. Right now with the stable coins, especially Tether, we have an opportunity to let people keep capital into the crypto space just by holding stable coins, and after that it's actually much easier to buy another crypto during the next bull run. Another thing I noticed is the futures. So right now it's really popular. I mean, you can short your volatile assets as well, and because you are shorting, you're not selling, so there is no huge sell pressure to the assets. And this is also like it's bringing some stability to the market, as far as I know. And so what those two factors, like stable coins and also futures you can short, they can how to say makes everything a bit more robust. Like it will not be like 90% of the down, I hope. Of course, most of like coins without anything they will, but most of liquid and popular with like user base and community will not, because it's easy to short it instead of selling, or it's easy to go into stablecoin instead of going to dollar or whatever.
Yeah. Stablecoin liquidity and just BTC liquidity also has like grown at a staggering rate compared like to last run. So I think if a lot of people were to exit right now, there's just so much more liquidity to soak up that like those to catch those falling knives essentially. So I do think we won't see an 85% drawdown. I think we have maybe 1 to 3 months left if we're being very pessimistic. And I don't know, like a top somewhere between 70 and 90 maybe on the pessimistic side. But I do see like consolidation somewhere between like 35 and 40 maybe. That's what I think most people are also looking at. Like the 200 EMA, it's been like pretty backtested. It's currently sitting at like 38. So depending on how quick that top comes in, but that would be amazing though if we were to consolidate like above the previous all-time high, like it would, I think DeFi would definitely thrive in that scenario, because everyone would move to stablecoins and everyone would be looking to do something with it. So there would be a very big incentive for like some new protocol to like take all the things that still work when the market is dead and then make the best out of that. So I do think we won't have such a horrible 2-3 year long, or well, it was a 2 year long, like I'm going back to flipping burgers at McDonald's type of mindset. So it would be nice. Yeah, it would be nice. I'm looking forward to that. So, I interrupted you previously. Feel free to continue.
No, I just wanted to kind of sum up our conversation, to thank all of you guys. Thanks, Jay, for joining us today. Stan, Aleksei, thank you very much. I personally enjoyed, as I already said, I personally enjoyed this conversation, and maybe in the future we will have same conversations on other topics as well. So if you have any ideas of things that we can discuss, feel free to share it in comments on YouTube or in our Telegram channels of Waves protocol. So thank you guys, and have a great day.
Yeah, we should make a 2 weekly thing out of this. That would be great.
Maybe we'll think about it.
Thanks, Jay, for coming, by the way. Really appreciate it.
Yeah, appreciate it, guys. This was awesome. I'm down to do more. These are great.
Thank you.
Cool.
Yeah, thank you.
Thanks.
So we're done? Not yet?
We are done. You can go back to enjoying the sun in Dubai. How was that?
Okay, nice.
I think we're still on though, but
yeah.
how was the